Hi, this is Chuck Oliver. Welcome to this week's Hidden Wealth Solution Review. Well, the single greatest factor of reducing your lifetime tax burden, according to Gallup, is proactive tax planning. See, I want you to go to taxessave.com. That's taxessave.com. And we put together about a 30-minute educational on-demand webinar. Now, a number of you have gone and have just been blown away with the techniques that we'll teach you, but the timing is just as imperative of importance is the techniques. And I don't care if you're high W-2 income, high self-employment income, or even high income as a retiree, folks. It all applies about how to reduce your income taxes. But in particular, one of the case studies I'll teach you in about the first 20 minutes is how a couple Roth converted $1 million of their IRA to Roth and used tax offsets by using deductions that are allowed to us in the tax code. Even if we're not self-employed, we could be retired, you could be high W-2, but if you're a heavy saver in these traditional 401ks and IRAs, folks, be mindful for a couple reasons. Number one of the things I teach is from the 7 key things that will be impacting retirement savers from the One Big Beautiful Bill Act. And again, all of our radio programs can be found on your favorite streaming app under Taxes Saved Podcast. But I talk a lot about the 7, but I want to make sure the 1 jumps out, and that is required minimum distributions will become trickier. Why? Because the Treasury has been asked to look into how they could maybe the impact of imposing required minimum distributions on large Roth IRAs and large 401ks. Now, I want you to really think about your thinking here for a second. The market's warming up to these tariffs, right? When the tariffs talk came out in April, the market was down, and then it rallied about 30%. And our clients that have been proactive caught that run up tax-free in their Roth IRAs, not more tax deferral that's going to tax them more in their regular IRAs. But we also know Trump's not getting a third term. And mind you, when someone says, well, these are made permanent, they're permanent to the current administration. There's a running joke in Congress based on tax policy that it should be written in pencil, as I shared with you. This is coming from our insider that worked on tax policy under George W. Bush's administration. And here's what I want you to know about this. You can erase prior policy, right? Even going back to the Reagan tax era, tax rates change from what we're seeing about every 8 to 12 years. So here's my point. Whether you're retired, whether you're working, if you have high income, regardless, and you've been a heavy saver, you're the tax target because they've already commissioned under the One Big Beautiful Bill, the Treasury to start looking into where they can find other taxes to make up for some of these other reductions. And remember, not all of these are permanent anyway. Many of these are running out, and people are wanting to learn, how's this going to impact me? Well, let me leave you with this. According to the Bureau of Labor Statistics, now get this, our country has never been older. 4.18 million are turning 65 this year, and over 4 million plus will turn 65 for the next 2 consecutive years. But according to the Bureau of Labor Statistics, because of how many people are retiring, there'll be 192 million fewer people in the workforce, 192 million, folks, over this next decade. And that means there's fewer people paying into tax rolls, which means they're going to have to go find the taxes somewhere else. Where are they going to find it? Those of us that are working, and for those of us that have worked hard and saved into these accounts that haven't been taxed yet. Let me teach you how to get your income and your assets out of the tax system at taxessave.com. And for going there, I want to gift you the book that you see, The New Holistic Retirement, and pay particular attention pages 49 to 86, and page 73 is where you'll see the taxes were once higher prior to Trump in his Tax Cut and Jobs Act that he just extended from 2017. In fact, at 80 grand, somebody was actually in a 25% bracket. Today, they're in a 12. At 250 grand, somebody was in a 33% bracket. Today, they're in 24% bracket. The time to act is now. And let me teach you how you can use these deductions that are allowed to you, whether you're self-employed or not, to offset your income and offset the Roth conversions that you can get your money out of the tax system now at maybe the lowest rates in history, but with strategies that are allowed in our tax system that allow you to use the deduction to offset the taxes. Taxessaved.com, taxessaved.com.